Okay, welcome everybody. How are you doing? Let me know that you can hear me loud and clear. Unfortunately, there's no intro music tonight. Sadly, I'll explain why in a little bit. But if you want to let me know that you can hear me loud and clear, we will get started in just a little bit. So yeah, if you can give me some feedback on the volume levels, if you can hear me loud, clear, it's a little bit of a makeshift technical setup tonight, and I'll tell you why in a little bit. But we're gonna have ourselves a blast. So come on in. Come on in. Excellent, 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 excellent. So, welcome everybody to another edition of the Traders Lounge with Israel. Every week we come usually on a Sunday evening. We start our trading week this way with some slightly non-technical keys, principles, concepts, advice, nuggets, pearls, wisdom, whatever way you want to put it. Um, so whatever way you want to put it. And this is another one. We're talking tonight about why you need a life outside trading. Now, for some of the new traders, you might want, oh yeah, why would there be any question about whether or not I have a live outside trading, life outside trading? Well, for those of us who've traded a while, you know exactly what I mean. So first of all, I'm doing tonight. I'm not in the studio. I'm actually at home, but I'm not in the studio. I'm actually doing tonight's Traders Lounge, ironically given the title, in my jammies, in my bed with my laptop and a makeshift microphone. Good to see you, D. Good to see you, Natalia, Ivy. And so, interesting that the one time where we're talking about having a good chart life balance, you can write that down. Chart life balance, meaning making sure you keep a functional, healthy, balanced life outside trading. I'm actually taking my own advice tonight, and I'm doing this podcast under my duvet, set up obviously in my jammies with a makeshift microphone connected to my laptop. When I have this amazing multi-thousand-pound setup studio in my study studio. Why? I've had a long week. It's been a long week, if you understand what I mean. And I thought, hey, if I'm going to talk about having a life, I might as well have one. So hopefully you can hear me loud and clear. It should still work. And let's get into it. So today I'm not going to be working from PowerPoint slides. I just want to talk. I want to share a little bit of my heart with you. Now, many of you know my story. You've heard it a few times, probably ad nauseum. So I've been in the market 13 years. I started trading roughly in May. Was it May or February? I'm not quite sure again now. Either May or February in 2007. I started then trading the stock market. I had a brokerage account, one of the old-fashioned ones, but it's old-fashioned now, where I had to pay anywhere between 8 to 16 pound a trade. At the time, you could only trade traditional stocks and shares. So that's how I started, and then I fell in love with ETFs. Because, by the way, ETFs are exchange traded funds. For those of you who don't know what an ETF is, an ETF is an exchange traded fund. And ETFs were pretty much the first instrument I traded that allowed you go long or short, meaning buy or sell. Because traditionally, when you buy stocks, you can only buy them. Then you sell once you've bought. But an ETF allowed you to sell before you buy or buy before you sell, in the sense that if you thought something was going down, you could actually buy the inverse ETF of that commodity or a basket of shares. And for the first time, I realized that whether the market was going up or down, I could take a trade. That sounded like a good thing at the time. It was horrible for me. Because when I first started trading initially, I could only enter a trade on a market that I thought was going up. So if I thought Tesco shares were going up, I'd buy Tesco shares. When I felt they were going to come down, I would sell them and I'd have to sit on the sidelines until I found something else I thought was going to go up. When I discovered ETFs, exchange traded funds, it meant if Tesco was going up, I could buy shares in Tesco. If Tesco was coming down, I could find an exchange traded fund that was tracking the opposite of Tesco itself, or we call them baskets, a basket of stocks, meaning uh, several different companies, or if it's forex, different currencies weighted in the same instrument. So if the aggregate value of those companies went up, the ETF went up. If the aggregate value of those companies went down, the ETF went down. Of course, the inverse ETF means it went up when the companies were coming down and it went down when the companies were going up. And so I started to fall into perhaps the biggest trap that any young trader, and I don't mean age, I mean in terms of your development, can fall into: over trading. Let me repeat: the biggest challenge, the biggest problem, the biggest uh, enemy to the progress of so many of you who are just starting your journey, you newbies, rookies, wet behind the ears, loving the markets, excited, thinking I'm going to make my first million in 6 months. The biggest trap you will have to avoid is overtrading. What do I mean by overtrading? I mean the insatiable urge to constantly be in the market, whether or not it is prudent or wise for you to be. The insatiable urge to take a trade. And like I've said to several of you, especially our registered students at Israel Keys Wealth, everything about your trading platform is designed to entice you to take a trade. The colors, the sounds, the way the market watch flashes, the way the trade terminal, when you type in your trade, if you want to make a trade, the way it blinks, the sound that it makes when the trade is being entered, it's all designed to be addictive. It's all designed to be addictive. Why? Because you've heard this before. I've said this several times, but for those of you who haven't, let me say it again. Who haven't heard me say, let me say this again. The 90 rule. The 90 rule. This is the 90 rule. 90% of all new traders will have burnt through 90% of their account in the first 90 days. Let me repeat: 90% of all traders, new traders, will have squandered 90% of their account in the first 90 days of their journey as a trader. This is the calculation that most brokers use, or this is, so I say, this is the gamble most brokers are taking when they take you on as a customer or client. That's why many of them are market makers themselves, in that they're not just giving you access to the market, they're taking the other side of your trade. We call them casino brokers in the trading world. A casino broker is a broker who, rather than just acting as an intermediary, literally just take the opposite side of your trade, because the law of averages tell them that if you're a new trader or you're the average trader, you're most likely going to be wrong. In essence, you're going to have lost 90% of your account in 90 days. And so they would make the most profit by simply just taking the other side of your trade, because they can just guess that what you're going to do is going to be wrong. Because many will not have done proper education, will not have proper mentorship, will be over trading, which we're going to come to in a second. And I want you to think about that for a while. There's 90 days or there's 3 months in 90 days. So, of course, there's 90 days in 90 days. Now, if you are risk managing correctly, which is a completely different problem, that's the second biggest cause of failure in new traders. It's bad risk management, which means that you can win just as often as you lose. But if your losses are far greater than your wins, you will go out of business or go out of business very quickly. And beyond, or aside from risk management, assuming you're risk managing correctly, if you are losing an average of 1% a trade, which is really all you should be losing, especially as a new trader, if you are an Israel Keys World student, we're going to beat you over the head with this till you succumb. Especially as a new student, a new trader, you should not be risking more than 1% a trade. And even when you think you are really proficient, you should be losing no more than 2% a trade. But let's take 1% for a second. If you're losing 1% a trade and you've lost 90% of your account in 90 days, the rule of 90 as we call it, what it means is you've taken on average one loss a day. Just chew on that for a second. It means you are on average losing one trade a day. And that's not counting your wins. Assuming that you lost all 90 trades back to back, which is highly impossible. I mean, just by sheer luck, nobody will lose 90 consecutive trades by the value of sheer luck. The law of averages means it should be impossible to lose 90 trades on the bounce. If you lose 90 trades back to back, this is most likely not for you. You should shake the market's hand, tell it well played, and go do something else. Either that or you are woefully untrained and you just have bad luck. And if your luck is that bad, luck in inverted commas, you're likely not going to do that well at almost anything else that you try. And I'm not being mean, I'm not being insensitive, I'm just being factual. But even factoring the odd win just by the value of sheer luck, you will only lose 90% of your account if you are what I call an everyday trader. Now, there is such a thing as a day trader. But in the words of a mentor of mine, being a day trader doesn't mean you should be an everyday trader. Let me repeat. Being a day trader doesn't mean you should be an everyday trader. One of the greatest skills you will learn as a successful trader is the ability to be out of the markets and not be addicted, not be itching, not be obsessed with getting in. Let me repeat. One of the greatest superpowers you will learn, and if I'm your mentor, hopefully that I can teach you, is the concept that it is okay to not even be looking for a trade in the first place. I don't mean look for one and not find one. I mean, it is very okay to plan your schedule to have days and sometimes weeks where you are by design intentionally not a participant in the financial markets. Now, I know this is countercultural or counterintuitive because, of course, you're a trader, so you want to trade, right? You're still following me? Let me know in the comment section that you're still there. But half the battle is knowing what trades to avoid. And you cannot walk away from a trade when it presents itself if it's wrong, if you don't have the capacity to just simply say no to the markets. Now, this is the danger of overtrading. Like several other endeavors, but I haven't dealt with anything in my life that pushes this principle far any worse than trading forex or the financial markets. Trading works with what I call the pain pleasure cycle. Some people talk about fear and fear and greed are valid emotions, but I want to deal with pain and pleasure here for today. When you win a trade, or when you are winning a trade, you feel pleasure. And the human brain is designed to carry on or amplify any activity or environment that brings it pleasure. When you lose a trade or are losing a trade, you feel pain. And the human brain, again, is designed to shut down activities that cause it pain. And so you get into a cycle where if you're doing well, you want to do more. If you're doing poorly, or you want to stay in what you're doing, you want to carry on riding that train. If you're doing poorly, then you want to stop what you're doing quickly to end the pain. This is the problem, and this might be counterintuitive. Even that pain can create an addictive feedback loop. In essence, while the emotion of pain makes you want to shut down that trade, once the trade is shut, and actually that's hardly what happens. I'll tell you that. I'll come to that in a second, because usually we try to end the pain not by closing the trade like we should. We try to end the pain by moving our stop loss and deferring the finality of the loss. That's just human psychology. Because what we are really afraid of, or what's really hurting us, is not so much the fact that we're currently losing, it's the fact that when the trade is closed, or when we stop trading for a while after a string of losses, we will have incurred a hit on our equity. And so our brain begins to play tricks on us and tell us, if I don't allow this end, there's a chance I could win. It's what we call the puncher's chance in boxing. If I don't get knocked out, if I stay on my feet, if I keep taking these punches, there's a chance I might land one that helps me. And the vast majority of the boxers who came out of a fight permanently scarred, let me put it this way: quick knockouts don't give you long-term brain damage. You get into the fight, you get hit once, you drop, you see stars. By the time you wake up, the fight's been called off. Your trainer helps you to your stool. They splash cold water over you. That's kind of okay. It's the fights where you take punishment, hit after hit after hit after hit after hit. Those are the ones that change your career as a fighter, as a boxer. Well, that's what happens when we trade. Because if you don't have good psychological training or psychological discipline, you will stay either in a trade much longer than you should, or you will stay in a string of losses because you feel I will get it back the next time. And you'll usually increase your lot size or your position size, because if you lose 1%, then you risk 2% the next time trying to get it back. And if you lose 2, you risk 3 or 4. And usually by the time you come to your senses, your account's wiped out because you don't know how to walk away. So that's one of the first dangers of not having a life outside trading. It's over trading. It's one of the reasons, I should say, why people don't have a life outside trading is They get caught up in this feedback pain. Or if you're winning, and I've done this before, and I must confess, this is one of the most stupid things I've ever done. I am ashamed to admit it, but I've been there, done that. You go on a 5-6 trade win trade 5-6 trade win streak, and pleasure sets in. You are smelling yourself literally. You are planning what you're going to do with your first million. You believe, oh, this nobody told me this was so easy. You're ready to write a book or start a course on how to trade. And then you get overconfident. Again, you start over trading. And again, one of the dangers of over trading is the more frequently you put live money in the market, the less likely you are to have conclusively thought through your decision making process in entering that trade. If you're taking a trade a day, you can do that. If you're taking 4 a day, it's hard. In essence, the more you trade, the less likely you are to take the time to analyze each individual trade on its own merit and make objective, dispassionate decisions as to whether or not you should be entering. And then your 7th or 8th trade, you're like, you know what? I've been risking 1%. I'm going to risk 10% because surely I have the holy grail. I have the best strategy. I'm invincible. I know what I'm doing. And guess which trade that trader is most likely to lose? That 8th trade with the 10%. Yep, D. Exactly. Because again, in the words of the old song, and I'm dating myself here, you need to know when to hold, when to fold, when to walk away, and when to run. Not every battle requires your gunpowder being wet. Now, let's talk about the other side of this. This is a vicious cycle. First of all, if you are trading because you're bored, if you are in the market to get a sense of pick me up, if this is your hobby, please quit now. I'm pleading with you before you get hurt, before you do something foolish, before you burn through your pension or through your mortgage money, or before you make this. I'm warning you, if you see trading as a source of fun, if you are in it because you can't find anything else to give you the pickup that you desire, if you are in it primarily for a rush of adrenaline, please stop now. Withdraw every single penny from your live account. Close your uninstall your trading platform, whether that's MetaTrader 4 or 5. If it's TradingView, take it off your bookmark on your browser. Please do not make another trade because it won't end well. Because the human brain is wired for something called dopamine. I want you to write this down. Dopamine. Dopamine is the exact same hormone that is triggered by things like drugs, alcohol, basically the things that trap people in addiction or substance abuse. Dopamine is what we call the addiction drug or the junkie hormone. Sorry, the addiction hormone or the junkie hormone. The problem is dopamine is not only triggered or isn't triggered solely by what we would call dangerous substances. It can be triggered by sugar. It can be triggered by excitement. It can be triggered by things like your mobile phone, computer games, movies. And one of the problems, I'm of the opinion, one of the problems with our world today is we live in a society and a culture that is dopamine addicted. The levels of dopamine our brains are exposed to is so high. Mankind has forgotten the art of being bored. Boredom now is, or should I say, being idle now is almost impossible because there are a billion things triggering your dopamine receptors and causing highs and lows. That's what happens with drug addiction. The cocaine triggers a dopamine rush, which gives you a high. That's the feeling. That feeling of the high is a dopamine rush. And then when it wears off, you crash and then you have a low. And so you go through a seesaw. It can be triggered by what you call it now. It can be triggered by cocaine, by marijuana, by white powder. It can be triggered by TV, by an addiction to a soap opera or football on the telly or whatever it is. It can be addicted. It can be triggered by sugar. But there are few less effective dopamine rushes than that which you get if you approach the financial markets undisciplined. You can become a trading junkie if you don't have a life outside trading, where your sense of excitement, your up and down button is now pushed by whether or not you are in or planning to be in a trade. And this is made worse. So the dopamine situation is made worse. The overtrading, the pain cycle is made worse. The poor risk management cycle is made worse by not having a life outside trading. The best traders, and I would humbly consider myself a good trader, but the best traders are usually those who have a healthy, what I call chart life balance. I want you to write that down. Healthy chart life balance. You need a healthy chart life balance. In essence, are you balanced and healthy enough in your everyday life that you do not require being in a trade or planning to be in a trade to give you a sense of fulfillment, joy, or excitement? Is your life healthy enough to the point where you don't need to be transacting with the markets for your daily rush or your daily high? In essence, you have reduced your trading activity to a boring exchange of value. I'm trading because I want to make a profit, and I'm not even addicted to the need for the money. Come to that in a second. I'm not trading because I have an urgent need. I'm trading because I have an edge, a repeatable, dispassionate strategy and approach to the markets that will consistently generate me profit over time. In essence, good trading should be boring. In fact, there are days where you should have to pick yourself up to trade, where you just cannot be bothered, not because you're losing, not because you're afraid, not because you're anxious, but it's just, oh, here we go again, another market structure break, another stop hunt, another Fibonacci retracement, another engulfing, another entry. And yes, I know I'm holding for 321 or 421. I'm going to get out at a previous high or low. Or at this point, I'm going to move my stop to zero and take off half the profits. It should become so rinse and repeat. Now, of course, when you're a new trader, there will always be the dopamine rush. You cannot avoid that dopamine cycle when you first start. And that's why discipline and mentorship are important. That's why the Traders Lounge, that's why you should be hearing this kind of stuff. But after a while, It should be so rinse and repeat. The only reason you keep doing it is because it keeps generating finance for you. But you're not addicted to that rush any longer. And the people who find it the hardest to control this balance are usually those who either have no life or for whom life is not going too well outside the markets. And it's worse if you're doing well as a trader. Because again, your brain is wired to do more of what it thinks it's good at and to avoid what it thinks it is bad at. If you believe you're bad at life, if you believe you're a bad parent or a bad spouse, or you're bad at your job or your business, if trading becomes, and this is where it becomes dangerous, and this is why we do things like the Traders Lounge, why we do mindset coaching, why we offer psychology training, because if trading is the singular or the most successful thing going in your life, you will usually develop an unhealthy dependency on it. If everything else is going badly, if you don't think you're doing well at everything else, and this is the one thing that you think or you feel or you are experiencing some success in, the tendency is to become more and more engaged in it till it creates an unhealthy balance. And you'll do two things. It'll either drive you to overtrading, which will cause you to start to fail in trading, or it will make the rest of your life worse. Trading without correct boundaries, discipline, and a psychological approach can cost you meaningful relationships. It can cost you fulfillment in other arenas of pursuit and effort. It will cost you mental health unless you engage it correctly. That's why, gents and ladies, you need a life outside trading. The best thing you can do for your success as a trader is to invest in the quality of your life. And I don't mean how much money you have. I mean the quality of your how fulfilled and how fulfilling your life is outside trading. If you have a healthy mind, meaningful relationships, good hobbies you go to for your dopamine rush, as a principle, never use something that can cost you something significant, whether it's money or relationships or anything else, or your health. Never get your dopamine, in my opinion, from something that could cause irreparable damage. Now, of course, I mean, you could argue that anything out of out of uh, out of moderation or anything out of balance could cause irreparable damage. Dopamine, I agree. For instance, if you watch TV all day long and don't do your work and not don't run your business or don't go to work, you'll lose your job and lose money. That's true. But what I mean is this: beyond those extremes, when I watch television, I've given up my time for my dopamine rush. I carry on with my life. When I trade, I could lose my pension getting that dopamine rush. And like I said, it's designed like a gambler's table to keep you coming back. That's how casinos make billions of dollars. They know that if they can hook you on that dopamine rush, you will spend your life savings in one night and then ask yourself in the morning, what was I thinking? Dopamine, in my opinion, and financial or health losses are a bad combination. Find a habit that costs you something fixed. You want to play football, it costs you your contribution to the pitch. You want to knit, it costs you the ball of yarn and the knitting needles. You want to watch TV or movie, it costs you the price of entry to the cinema, and that's it. It is always a bad idea to put uncontrolled amounts of capital And no matter how small your account is, if you are trading for a high, it is uncontrolled capital at the mercy of a dopamine rush. And the only way to successfully prevent this is one, train your mind to be healthy outside trading. So you need a healthy, successful, disciplined mind in the rest of your affairs. You need to be the kind of person who has self control, who has a zest for life, who is fulfilled, and who has healthy mental habits outside trading, aka a good life outside trading. And secondly, you also need to invest in a good quality of fulfillment in life, whether it's your spouse or your children or your family, your friends, your hobbies, sports, shopping, cooking, um, doing. I know people who love to do the grass. I don't know who they are, or I don't know what kind of people they are, but I know them. What I mean is, I hate doing my grass or my lawn, mowing my lawn, but I know people for whom it's therapeutic. Walking, hiking, nature, um, all sorts. The healthier your life is outside the markets, the better chance you have of being a successful trader in the long run. I'm going to leave it there for tonight, guys. Like I said, I'm practice what I preach. This is a lazy one for me. I'm sat down in my jammies, under my duvet, sat up in my bed, using my mobile microphone because I'm having my life outside the markets. Tonight, there's no analysis for me. It's been a long, hard week. I'm going to get some sleep. Tomorrow is my day off. I'm going to have some time with my family, my wife, my boys. When she comes from work, when they come from school, I'm going to go walking in the woods near my house. I'm going to take a walk. I'm going to do some meditation, some praying. And then in the evening, roughly at about 6 p.m., 6 or 7 p.m., for the first time in the week, I will open my charts and see what I can find for the rest of the week. My brain will be fresh. My mind will be alert. I will have detoxified from the pain, pleasure, from the fear, greed from last week. I have plenty of joy in the rest of my life that I've invested in, and therefore I can have a purely financial, transactional relationship with the markets, which is the only way to successfully do this in the long run. Thank you for hanging out with me tonight, folks. This has been the Traders Lounge with Israel. I hope you now appreciate why you do need a life outside trading. Don't fall for the trap I did. If you realize you are starting to get codependent or addicted to the markets, or you're on a string of losses and you find yourself throwing more and more money in, hoping that you will strike it big to make up for your losses, or you're on a winning streak and you catch yourself starting to get unruly or indisciplined with your risk management, scream for help. Go to your mentor. And if you have none, or I'm yours, you know where to find me. Um, Protect your mental health in the long run in trading, and you're more likely to be successful in the long run. All right, guys, that's it for tonight. I will see students this week as usual. Make sure that your what you call it now, your Telegram. That's the word. Your Telegram is set to receive signals and announcements all through the week. Of course, if you don't know what that means, it means that you're not a registered student. If you want to register to be a student with the Israel Keys Wealth Academy, either for an ongoing mentorship package or just for one-on-one training, this is the email address to get in touch with us. You can do that by email. You can also send a WhatsApp or Telegram to this number on your screen. We would prefer WhatsApp, and we will get to you with all the information that you need. All right, guys, please make sure you like, share, comment, and subscribe when you do see this either live or on recorded. or on a recording. I will be, well, I'm not going to be with you. Tuckman's going to be with you guys 9:15 tomorrow for our usual beginners pre-week analysis. And then I'll be with you guys on on Wednesday and Thursday. All right. Take care. Have a great week trading. God bless. Bye bye.